Okay. So far, all of you, I think, attending in morning 7 to 9 and 9 to 11. So far, we did discussed about, financial accounting. Okay. So that we already discussed what is the mean for why we required in SAP financial accounting. Okay. So financial accounting, it is mean for external reporting. Okay. So whereas the controlling module, it is meant for the management reporting. Okay. So when I say that management reporting, it is purely for the decision making. Okay. So in the financial accounting, we have been discussing, the financial FI model, FICO, finance and controlling. Basically, finance it constitutes like having the submodules of like general ledger accounting, then accounts payables, accounts receivables, and bank accounting and asset accounting. Okay, each submodule it has its own significance to collect the data. Okay, so whereas controlling module which constitutes, okay, so cost element accounting and the cost center accounting, product costing, and profitability analysis. Okay, so these are the four main chapters, I would say that we can call it as a controlling. Okay, let me share my screen, briefly give you what are the things that we are going to cover. Okay, I think does anybody join only for controlling in this group? Only today who joined? Can you raise?
Myself.
Yeah,
Yes,
Malesh.
myself.
I can see Sriram.
Yeah,
Yes, I am myself.
Okay, what's your full name, Sriram?
Sriram.
Actually, specified Sri Ramana, it's
Sri Ramana. Okay, all right. The Malesh, right? There is another person. Okay, so I think except both of you, everyone knows about me. Okay, so no need to have an introduction. Uh, okay, so let me share my screen. I think you are already able to see my screen, right?
Yes.
We can.
Okay, before I'm going to present some deck, it is at a high level. Okay, so what are the things that we are going to cover as part of the controlling? Okay. So here we are going to talk about cost element accounting. Okay. So why we need cost element accounting? Okay. What exactly it does in controlling? What is the importance of the cost element accounting? And the cost center accounting? Okay. So then product costing, then margin analysis. Margin analysis. Okay. So if you want to call yourself as a controlling consultant, okay, you must be good in product costing and margin analysis. Of course, in the product costing, we have different scenarios. Okay, so that also we will learn as part of the controlling. So when you talk about in depth of the cost element accounting, here we will talk about more categories of the cost elements. Okay, cost element, cost element categories. Okay, so mean to say nature of the cost. Okay, when you are collecting the cost from the different modules, okay, you must have to define GL account as a cost element. Okay, so that we will like which GL account to be defined as a cost element. Why we have to define GL account as a cost element? Is it the primary cost, or basically the controlling module, it collects the cost and revenues. Okay, it is not going to collect the your balance sheet data items. Okay, so by implementing the controlling module, that means by implementing these four functionalities, okay, we can able to prepare the margin analysis reports or profitability of the reports. Okay, so in the cost element accounting, we talk about cost element categories. We have different categories. Okay, basically we talk about in depth on the cost element categories. Why we require to define GL account as a cost element. So then, if we talk about cost center accounting, then here we will talk about planning. Okay, why we required cost centers in traditional accounting. I would say that departmental costing. Okay, so cost center in SAP terminology, cost center is nothing but department. Okay, how we collect the collected cost, how you are going to allocate between the departments or the cost centers. Okay, so why we required cost center accounting? Especially we discuss about flows, cost flows. Okay, to the cost centers. So then we discuss about planning. In planning, we have different types of the planning. Okay, like dependent planning and independent planning. Okay, what is the difference between why, in which cases we do select the independent planning? That means organizations will follow the independent planning and dependent planning. Okay, here we talk about more in the cost center accounting, we talk about more on the dependent planning and independent planning. Okay, so then as a part of the cost center accounting, we will also talk about internal orders, internal orders. Okay, budgeting, availability control, budget availability control, budget availability control. Okay, so these are the subtopics we discuss as part of the cost center accounting. Dependent planning, that means once we complete the cost center accounting, okay, everyone should be comfortable. Okay, what is the functionality of the cost center accounting? So especially this training program, the objective of this training program, okay, after completion of the controlling, okay, we train you what it is needed. Okay, that means in order to survive, in order to get the job in on controlling. So as you know, all of you, okay, so what is the importance? Controlling like dynamic. Okay, so in the market, I would say that 100 people, if you take only few people, I would say that not more than 5% who are having the hands-on experience, or even the not hands-on experience, even theoretical knowledge also not more than 10%. That means as a trainee of you, as a learner, if you can understand whatever we are going to train you as part of this training program, that is more than enough to get the job. Okay, if you add controlling in addition to the FI, at least if you can able to project 30% of the knowledge. I'm saying that knowledge theoretically or system perspective when you get that experience, when you do the practice. Okay, so then I'm sure that you will get the job wherever you are going to attend the interviews. If you say that I good in the cost center accounting, I'm good in the product costing, I know the margin analysis functionality, then I'm sure that, let's say irrespective, there are about 500 people are there. Okay, so your resume will have the weightage. That is the importance of the controlling. Okay, so let's park that. Okay, so now as part of the cost center accounting, we discuss about cost flows to the cost centers. Okay, so then planning. In the planning, we talk about more on the dependent planning and independent planning. Internal orders. What is the functionality of the internal orders? Okay, again here in internal orders, okay, we discuss more about OPEX. Okay, so OPEX internal orders and CAPEX internal orders. CAPEX internal orders. So what does it mean? Okay, so overhead cost is nothing but operational expenditure and capital expenditure internal order. That means internal order with AUC. Okay, internal order with AUC is nothing but capital expenditure internal orders. IO with IO with internal order with AUC. Okay, so we need to implement asset accounting. Hopefully by that time we will be able to complete asset accounting. Okay, operational expenditure internal orders means overheads. Okay, like R&D type of the internal orders, where or we will track the specific expenditure by using the internal order. Okay, R&D type of internal order, R&D expenditure, or I would also say that market fair events, market fair or sales promotional event, sales promotional event. Okay, so for this specific for the specific object we create the overhead internal orders, then we will settle them to the different receivers. So here in internal orders mainly we need to concentrate on the internal order with AUC and also operational expenditure internal orders. Budget availability control. So that we will discuss what is the budget availability control and how this functionality we use against cost centers and against internal orders. Okay, so this we will talk about more in cost center accounting. Okay, so then moving to product costing, what are the things that we cover? And as a part of the cost center accounting, we will also discuss about allocations. This is very, very important. Allocations. Here we talk about more distribution, distributions, then assessments. Okay, so these are the in the real time. So whatever, see, there are some of the topics we are not discussing means that we are not using in the real time. Okay, distribution as part of allocations. We also have indirect activity allocation. There are a number of allocations. Okay, out of 100, I would say that 98% of the scenarios in the real time we use the distributions and assessment in order to allocate the cost from one department to another department. What exactly the functionality of the distribution, how it makes the different over the assessment cycles. Okay, that we discuss as part of the distribution assessments. We call it as a universal allocations. Okay, in S4 HANA, we call it as a universal allocations. Okay, this functionality we discuss in depth as a part of the cost center accounting. Okay, so then product costing. So in product costing, we talk about product cost planning, then cost object controlling, cost object controlling. Okay, in product cost planning, we discuss about. Okay, so this is maybe some of you are not aware about this terminology. You will get to know that. Okay, so I would say that for 4 weeks, not these 2 weeks, the next 2 weeks you will be able to understand some of the terminology. So as I said, so there is no dependency what we are discussing on our day to day, during the week. Okay, this is completely, let's talk, if you talk about cost element accounting, now you guys are already comfortable how the GL accounts can be created. So where we will talk about more GL account type, right? So when you go to the FS00, where you will see that GL account type, and so far so good, everybody is used to create the GL accounts by using the balance sheet account, by using the non-operational expenditure, primary cost and revenues, and secondary cost. Okay, I think I haven't covered, and we will discuss as a part of the cost element accounting. Okay, so now in the product costing, so we discuss about as a part of the product cost planning. Okay, here we talk about more cost component structure, cost component structure. Then we discuss about costing variant. Then we discuss about costing sheet. Okay, so these are the as a part of the key configurations as a part of the product cost planning. One must have to understand what is the cost component structure. Sir, please mute yourself, whoever not speaking. Okay, do not disturb others unless you want to speak something. Okay, so now product cost planning. As a part of the product cost planning, we are going to talk about more on the cost component structure. What is the cost component structure? Why it is required in the product costing? Then the costing variant and the costing sheet. Okay, these are the key important configurations. Okay, so one must have to understand, one must be comfortable to define the cost component structure and to define the costing variant and to define the costing sheet. Okay, these are the prerequisites, I would say, that in order to calculate any cost of the material. Okay, so then we talk about cost object controlling. So here we talk about, okay, so double IP, more, I would say that, or costing variants for plan, costing variant for plan cost. Okay, so then we talk about costing variant for actual cost. Actual cost. Okay, so then we discuss about double IP, work in progress. Work in progress. What is the work in progress? We will discuss the variance. Okay, so then here in the cost object controlling, we have different scenarios like make to stock, product cost by order, product cost by order, then product cost by period. These are the different scenarios. Okay, product cost by period. I'll say that these both are, it comes under the make to stock scenario or made to stock scenario. Okay, made to stock. Okay, so at least you guys should be comfortable any one of this scenario, either by period or by order. What is the difference between by order and by period? We will discuss at the respective time. Okay, so product cost by sales order. There is another functionality, product cost by sales order. So this we can call it as a make to order. Make to order. Okay. What exactly process flow differences, how it makes difference over the made to stock or make to stock, we'll discuss. These are the three scenarios we will discuss more on the as a part of the cost object controlling. And the special scenarios, if we talk about little more, what are the other scenarios that we are going to cover as part of the product costing? Special procurement key, special procurement key. I would say that these are the additional scenarios. Additional scenarios. Okay, so special procurement key that we cover, additive cost we discuss about, add-on cost, additive cost, add-on cost. Okay, this is one of the scenario we talk about. Then material split, material split or split valuation. Okay, split valuation. Okay, then co-product and byproduct scenario. Co-product and byproduct scenarios. Okay, so these are the, I would say that then there are other scenarios as well. Okay, so subcontracting process. Okay, so these are the additional scenarios that, okay, we will try to understand. as a part of these are most often experienced in interviews. These are the some, if you know these are the sub scenarios, that's more than enough. Okay, there are mixed costing. Okay, there are also like origin group, there are a number of process orders. Okay, so those are not required at the moment. Okay, for your learning, if you would understand like what is the special procurement day, what is the additive cost, that means how do you add the cost, additional cost when you have the stock transfers between the plants. Okay, so by using the additive cost that we can achieve to the business requirement. What is the special procurement key? Okay, if you have multiple plants, one is manufacturing plant, there is a when there is a depot plant. Okay, I want to get the cost from one plant to another plant. How do you get that cost? So means these additional scenarios. When I say these additional scenarios, this is more relevant for the controlling consultant. Okay, so if you want to call yourself as a controlling consultant, you must be good in all these scenarios. Okay, so material split valuation. Okay, I have the same material. I do not want to increase the material master data, maintenance of the master data. Okay, the same material I am procuring from different sources. How I can evaluate the material with the different inventory valuation methods. Okay, by using the material valuation, so we can able to achieve that requirement to the business. And the co-product and material and the co-product and byproduct scenario. So these are the auxiliary products. That means in especially process industries. Okay, so if you are manufacturing, let's say the best example, sugar manufacturing, there is a molasses. Okay, or bagasse, I would say that another terminology. So you will get the additional products. How that additional products you are going to evaluate it. Okay, so that we will try to understand. Subcontracting scenario. There are cases where business used to give the outsourcing. Okay, some of the key operations they used to send the products to outside subcontractor or the vendor. So they will do that activities and they will give it back to the finished product. Okay, how do you map that subcontracting scenario in SAP? What is our role? Okay, so whatever the scenario that we are going to discuss about. So as a controlling consultant, what is your role? Okay, it doesn't mean that the scenarios I have mentioned, this is independently we are going to deliver. No. Okay, because as you know that SAP is highly integrated with other modules. Okay, so to implement product costing, we highly depends okay on the production and planning module. They do the 80% of the work. Our role is 20%. Okay, all the manufacturing setup would be done by the production people. Our role is once the product is about to manufacturing, so how the cost gets calculated, what are the key drivers in order to calculate the cost of the product. Okay, that we will have to configure in the system. Okay, you are not going to control the cost of the business. Okay, you will set up the system. Okay, that business will use to record the cost or to calculate the cost, to control the cost. Okay, so we will set up the system. So we have the different types of the projects that we will already discuss, like what is the implementation project, what is the support project. Based on the project where you are going to deploy, your role is going to be decided. Okay, now whatever that we are discussing, keep that in mind. This is a kind of the project. Okay, we will set up the things from scratch. Okay, so we will set up these things from scratch. That means you are constructing the SAP for specific company code. So this is the kind of the experience that you will get. You will feel that you are working in implementation project. Okay, you may think that how the real-time scenarios is differs. No difference, whatever we are discussing, but here we are in front of you, but in the real time, you will be in front of the client. Okay, that is the difference. Otherwise, this is a kind of the implementation project. Okay, since we are going to create the company code, we are going to create the GL accounts, you are going to tell the system that I am following this financial year. Okay, then you are going to create the GL accounts, you are going to set up the cost centers, profit center, everything. It's the same, we have in the real time also, but we would have some discipline. We will have some discipline. Okay, so first you need to identify the dependency configurations. Okay, in order to proceed product cost planning, what are the other data, other setup it is required. So which model that they have to complete their configuration. Okay, as I said, product cost planning module highly depended on the production and planning module, whereas the margin analysis, profitability analysis module is highly dependent on the sales and distribution module. Of course, we can do our configurations, but if we want to test the data flows end to end, then sales and distribution module should be in place. Okay, So that we will discuss. Now, these are all the scenarios we are going to cover as part of the product costing. Okay, so if any other scenarios to be added, I'll add that. Then margin analysis. And also here material ledger actual costing. Okay, so that we will cover at the last of the our sessions. Okay, so now margin analysis. So we covered cost element accounting. So we talk about cost element categories, cost center accounting, value flows to the cost center, then the planning, then we discuss about internal orders, then we discuss about allocations, that is the universal allocations. Then the product costing, we will talk about product cost planning and the product cost object controlling. Then within the product cost planning, these are the key drivers. Okay, as I said, these are the key drivers in order to run the cost estimate. Okay, cost component structure, which gives you detailed view of the cost components of the product. Okay, or breakup of the cost estimate. Costing variant, so which controls what all the parameters that is required. Costing sheet, one of the method. Okay, so costing sheet, one of the method is to calculate the indirect overheads. It is one of the overhead method to calculate the overheads. Calculate overheads. Okay, we also have template allocation, so that we discuss if time permits. Okay, so 70% of the cases, I would say that customers or clients are using the costing sheet. Okay, this costing sheet we use for different purposes, but in the product cost planning, so we talk about more on the overheads, how the indirect overheads can be calculated. Okay, so cost object controlling, costing variant for plan means you have the product cost by order or product cost by period. So when you create the orders, okay, all your cost, okay, your manufacturing cost would be routed through the cost objects. Okay, it can be production order, it can be product cost collector, or it can be sales order. Okay, so in order to calculate the plan cost for the order, so we have to have costing variant. Similarly, in order to collect the actual cost, we have to have costing variant for actual cost, costing variant for the order. So these are the configurations that we are going to specify in the order types. Anyway, that is, it is too early to talk about high level, in depth that. And product cost by period, we have certain differences: product cost by period and product cost by order. Okay, where business want to calculate work in progress for the specific order. Okay, so we use in descriptive manufacturing industry, we use the product cost by order as well by period. So in which cases, in which scenarios, as a controlling consultant, you should also be good which cost object to be recommended for the customers. Okay, these cost objects basically would be recommended by, so the product cost by order, or whether you use the product cost production order or process order or product cost collector, who finalize that? So production and planning people. Okay, product cost by sales order, it's a make to order scenario. That means if you talk about the difference between make to stock and made to stock or make to order, so there are certain differences. Okay, so in the made to stock scenario, based on the demand planning, so we manufacture, let's take the refrigerators. Okay, so basically what we do when we have the demand in the winter, so what companies will do, they're manufacturing the products, they keep the stock in the warehouse, then they used to sell the in the seasonal product. So that is called as a make to stock scenario. Make to order, okay, so variant, let's say your laptops, okay, based on your customer specific, okay, or based on the customer requirement or specifications, the products are going to be manufactured and delivered to that specific customer. Okay, so there are value flows differences that we will discuss in depth in the system. Okay, so the already we have talked about additional scenarios. Now we talk about margin analysis. Margin analysis. Okay, here we will talk about value flows. Value flows. What is the margin analysis? First of all, before we get into that, why we require it? What is margin analysis? Why it is required? Why it is required? Okay. So financial accounting. Okay, right? You will be able to, by implementing the financial accounting, so you will get all the financial statement, income statement. What is the income statement here? Okay, so by preparing the income statement, what do you know that? You will be able to know that you will be able to calculate your net profit or operating profit, right? So you'll have the sales. Okay, you'll also have COGS, COGS. So then what do you calculate? So even in the financial accounting also, why we required margin analysis? You have the sales. Okay, let's assume that I'll give the 1 lakh or 10,000. You have some COGS. Okay, let's assume that 6,000. Okay, you are able to calculate gross profit. Okay, so this gross profit, by looking at the income statement also, you will get, business will get to know that what is my gross profit. Okay, then operational expenditure, OPEX, I would say that. Okay, let's assume that we have 1,000. Then you will be able to calculate operating profit. Operating profit. Okay, so what is operating profit? 4,000 minus 1,000. I'm just giving you at a high level. Okay, if you understand what I'm going to tell you now, margin analysis and income statement. So these data you will also get in the financial accounting. Okay, so then why we needed margin analysis? Margin analysis is nothing but profitability analysis.
So you mean to say like so we can know detailed level about profitable analysis, am I right?
Yes. Why? So margin analysis is nothing but profitability analysis in legacy, that is in the ECC environment we call it as a accounting based COPA. Okay, controlling and profitability analysis. So these details you will also get in your financial accounting. That means your income statement, possible to prepare income statement within the financial accounting. Then why I needed the margin analysis? Okay, then if you deduct some taxes, corporate taxes, let's assume that they're about 1,000, 50% or 30% of the tax. Okay, then you will get the net income, right? So this is the aim of the financial accounting, right? So you'll get the net income. These values you will also get this statement. So this is the business is looking for income statement. So this is here also you will get to know that you are able to know what is my net income, what is my gross profit, what is my operating profit. Then why we needed a margin analysis? Okay, this is the question you will get from the customers also. Okay, that means if you are going to work, you are involving in the workshops initially. Okay, you have to differentiate what is the margin analysis. Okay, why we needed margin analysis. In the financial accounting, this is the financial accounting. Financial accounting. This report we will get in the financial accounting as well. Same we will also get, same we will also get in the margin analysis. Then what makes the difference? Margin analysis. Why customers have to go for margin analysis? COPA to be implemented. Okay, so these values we will also get in the margin analysis. Okay, then why we would needed margin analysis? If we have the same data is available in the financial accounting, then why margin analysis needs to be
It's a
implemented?
difference between revenue and cost, like margin analysis.
That's correct. But what my question is to you guys, I'm getting this information within the financial accounting FI model.
Uh, I think this is regarding to like a product-wise analysis.
Exactly. That absolutely you are correct. I
Like
have
gross
10
margin,
products.
operating margin.
Okay, yeah. So somebody has rightly said, product wise, customer wise, plant wise, profit center wise, that you will not be able to analyze. You will not be able to get the reporting dimensions wise. Okay, so let's say this is overall my net income at company code level. So this is, let's assume that our company code is MS01. CCN is nothing but the company code is MS01. This is the company code that we are using now, right? At company code level, I would be able to know what is my net income. But within the company code, we have n number of variants, n number of customers, right? There are about, in the best example, we defined only two customers, domestic customers and foreign customers, right? My business would like to know what is my margin at customer level. So let's assume that. So now these sales, I would say that of 10,000 only we have reported 300 or 3,000. Then this is about, I would say that 1,800 COGS. Okay, then I'll get the 1,200. Here, this is about, OPEX, I would say that 300. Okay, so then my operating profit, then the tax, I would say that 150. Okay, so then what is my profitability at domestic customers? Domestic customers. Then, okay, so I'll also able to prepare my margin analysis report for foreign customers. Foreign customers. Okay, so that means you will be able to calculate the margin analysis or contribution at each customer wise. I'll also say that, okay, sorry. Okay, here I'll give the 5,000. Okay, so that means for foreign customers, what is my net income or gross profit? Okay, so when I look at the foreign customers, my margin is 2,750. When I see domestic customers, my net income is 750. Okay, similarly, gross profit. So that means you will be able to calculate your profitability analysis reports at the different reporting dimensions. Okay, let's assume that this is the domestic customers. I mentioned that my profit center. So now you guys know that what is the profit center. It is a strategic business unit. Okay, at profit center level, I want to know, or plant. I have plant. Okay, so plant, let's assume that our plant code is plant is nothing but where you are manufacturing the product. Okay, it is the location. Let's assume that this is the 1,000 plant, and we have, this is the, another plant, we have 2,000 plant. Okay, now business is interested to know at this plant, at this customer. Okay, and or else. Okay, so I would say that this is the plant 1,000. Okay, and the customer is domestic. Customer group level, I'm talking about customer group. Okay, and individual customer also you will be able to calculate domestic customers. So this is one permutation. So there is another permutation, the same plant, but I want to know my margin analysis with foreign customers. So these are nothing but characteristics or reporting dimensions. Okay, business want to know what is the margin, what is the profitability. Okay, with this combination, domestic customers and foreign customers. Similarly, business keenly interested to know profitability. This combination, plant 2,000 and plant 2,000. Okay, so this, reporting dimensions level or characteristics level, we don't get the we don't get the data, or we cannot, it's not possible to calculate the profitability reports in the financial accounting. Okay, you will just know that what is the net income for the specific quarter or for the specific month. Not possible to drill down the reports at further level. So I just mentioned here plant. One plant may have multiple profit centers also. Again, business want to know each performance of the profit center. Okay, I just mentioned here the domestic customers. And the domestic customers, again, you may have the number of, under this plan, you may have a number of profit centers. That means the conclusion is that why we required margin analysis. By implementing the profitability analysis in the controlling module, we will be able to calculate margin analysis reports or profitability of the reports or profitability of the product at a different reporting dimensions level, be it customer, be it employee, okay, or be it plant level. So based on the business requirement, at what level they want to prepare your margin analysis reports. Okay, so to get that, to achieve that, we have to implement profitability analysis. This is the more often and frequent question in interviews. When you say that you are having good knowledge in the profitability analysis or margin analysis, so people will ask you this kind of the question. I'm already getting I business also, I mean, already knows what is there in net income. Then why it has to implement the margin analysis? You have to give this kind of examples, and you need to make them to understand. Okay, so why we required margin analysis? Okay, this is here. So we are going to talk about more margin analysis, profitability analysis. Here we will talk about value flows. So this margin analysis, to prepare this, okay, so you have the data now. If you look at here, you to calculate your net income or gross profit or operating profit, this information you would needed in the margin analysis. Then how do you get the data? How do you get this data? From which model we will get this data? Okay, we will try to learn as part of the margin analysis. Here we will try to understand value flows to the margin analysis. Value flows to margin analysis. Okay, this is very, very important. This is the only concept. If you can understand how the values will flow to the margin analysis. Okay, revenues will come from, I'll say that I'll give you some of examples. So if you can understand margin analysis is nothing, but you should understand the configurations, what it is needed to be set up. Okay, here we'll get the revenues. Most of the data, I would say that most of the data, I'll say that 80%, more than 70% of the data, 70% of the data, 70% of the data, it will flow from SD to COPA. Okay, COPA is nothing but controlling and profitability analysis. 70% of the data. So that means your margin analysis is closely integrated with the sales and distribution model. Okay, so we'll also get the data from FI to COPA, FI to COPA. Then we'll also get the data from cost center accounting, cost centers to COPA. Okay, product costing to COPA, product cost, COPA. Then IO to COPA. IO is nothing but internal orders. Okay, so other modules like FI, FIMM. Okay, there are certain values, other modules to COPA. So these value flows we will discuss as part of the margin analysis. Okay, this is I would say that at a high level, what is the syllabus that we are going to discuss as part of the controlling module. Okay, so this is purely, the configuration is very less, I would say that. Okay, so of your financial accounting, I would say that only 30% configuration, very, very less configuration in the controlling, but understanding is needed more. Okay, so more understanding is needed. How, what is exactly the product costing? What is exactly the margin analysis? Okay, every functionality where we discuss, you have to question yourself why I'm implementing this functionality. Okay, so configuration, I would say that if you ask me how much time it takes, like not more than, if you continuously do the configuration, it won't take not more than 5 hours to complete the controlling configuration. But understanding it is needed minimum 2 months. Okay, our overall planning for controlling to complete 70 to 80 hours. Okay, planning. Maybe it may extended also 80 hours. Okay, mean to say every week in initially we take only 6 to 7 hours, but at least we have to have 8 hours per a week. That means Saturday and Sunday. We start early. Maybe if you have any obligations like you want to complete before 10, then we will have to start at 6:30 at least. Okay, 7 to 10, it's highly difficult to only 3 hours to complete all these scenarios. This is more than enough. So maybe some of you already been trained in controlling where they might have explained or they might have given n number of scenarios. Okay, that we don't require. Okay, that's what my statement. I'm reiterating it again. What you needed to get the job, what you needed to survive. So that we will be training as part of the controlling. There are a number of there are a number of scenarios in the controlling that you will learn once you get the job. Okay, to get the job, what you needed that we are going to impart from our training program. Okay, so this is the syllabus. Wherever if you learn these scenarios as part of the controlling, definitely I would say that I will ensure 100% you will get the job in addition to the finance. Okay, you have to do hard work to learn all these functionalities. It won't come in overnight. You'll get, if you do the continuous practice in 3 months, then you will be able to understand controlling module. Okay, so that's all about high level of the overview of the controlling. Any questions from anyone? Highly welcomed.
Mallikarjun, can we cover in cost center and actual calculation?
Sorry, I didn't get your question.
In cost center accounting, can we cover in actual calculation?
That's what I mentioned, right? In the cost center accounting, cost flows to value flows. I would say that. Okay. So here, actual value flows. Value flows to cost center means you collect the costs, then you will calculate the resource cost. Okay, activity price calculations. Yes, that we will discuss as part of the after planning. Then we will discuss about value flows to cost center accounting. So here, if you want to further add what we do, cost center splitting. Cost center splitting. Okay, here what is the splitting structure that we discuss? Cost center splitting. Here we discuss about splitting structure. Splitting structure. Then we discuss about actual activity price calculation. Actual activity price calculation. Yeah. So to answer your question, yes, certainly we discuss about price calculations. Okay. Once we have the actual data against cost centers, then we will calculate the activity price calculations. Okay. So we discuss what is the master data that is required in order to calculate the activity price calculations. Yeah. Any other questions, guys, from anyone? Just
any basics in ML any?
Material ledger actual costing we'll discuss at the end of the chapter. Okay. So we activate the material ledger, but actual costing that I'll discuss at the end of the chapter. Okay. Right.
Hi, sir. Actually, it's very nice to see that we have product costing and all. But if it is a service, how do we cost and how do we
For
allocate
service
these?
cost, see, first of all, you are calculating the product cost. So that means this controlling model is relevant for not for service industry. You will not go and implement a controlling model in in your banks. Let's best example banking sector or insurance sector. Do you think that controlling model is fit for those service sector?
But those two have some these type of
What is the product
allocations
that
and
they are
portions.
manufacturing?
They won't manufacture, but at least per service and extension, right?
No. So sorry to answer your question, controlling model we are not going to recommend to implement for service sector. I have not been experienced.
Okay.
Okay. Right. Any other questions, guys?
Mallikarjun, what about integration projects?
Yes, that's a good question. Okay. Now, before we start the product casting, okay, here I'll introduce FIMM integration. This is important. We have the dependency. Without FIMM integration, we are not going to start product casting. You must have to understand FI, finance and material management integration. Material management integration. Here you will understand valuation methods. Here we need to understand accounting determination, or I would say that GL account determination, for material postings. Material postings. Okay. So what is that you are going to learn as part of the FIMM integration? GL account determination for material postings and valuation methods. Valuation methods. In the valuation methods, we talk about price controls. Okay, here we have standard price and moving average price. Moving average price. So then you may ask the question, then what is the before margin analysis? Okay, we will also learn FISD integration. Here we'll talk about more FISD integration. Finance and sales and distribution, because as I mentioned that most of the data you would get from the sales and distribution module. Then your COPA module should be integrated with your sales and distribution module. Here we'll talk about finance and sales and distribution integration. Okay, here you will learn accounting determination for revenue GL accounts. Revenue GL accounts. Okay, so what you will learn in the FISD, simply we call it as a FISD integration. FISD integration. In short, people know that if I say that financial accounting, finance and sales and distribution, you may not able to understand. Similarly, this we can call it as a FIMM integration. FIMM integration. Okay, so these are the dependencies to complete, to move on. Okay, if you want to discuss, if you want to understand the margin analysis, first you should need to understand FISD integration. Okay, how the revenues will flow to the profitability analysis. To do that, to complete that scenario, first we need to understand what is the integration point between the finance and how your revenue GL accounts gets determined. So that we will discuss before margin analysis. Okay, before product costing, then we will discuss about FIMM integration. Here we will also talk about more like document splitting. Document splitting, even we complete in APR scenario also. Okay, what is the document splitting functionality, that we'll discuss. So that's not going to be a part of controlling syllabus. This is also not part of the controlling syllabus, but you need to understand the integration perspective. So that means till here. So people, there is even FI consultants should also be comfortable. Okay, should have basic knowledge till here, till FIMM integration. So who can be called as a controlling consultant? So then the consultant should have hands-on experience or thorough knowledge in the product costing and the margin analysis and also material ledger. Okay, material ledger is optional. Whether if you say that I had a good experience in material ledger, that's fine. Even if you say that you didn't get opportunity to get in the material ledger, that's also fine. Okay, but to be called a CO consultant, you should have thorough hands-on experience, at least knowledge in these areas. Okay, FI consultant also will have the knowledge till here. Okay, basic, this is nothing but basic controlling module. Till here, basic controlling module. Everybody is know, everybody, even the people in the real time also, people will know that what is the planning, what is the internal order. But in-depth product costing, no. They say that I don't have any knowledge and experience. You can also say that. Let's say if you want to try, once FI syllabus is completed, once we completed till here, then you can start to look for the jobs. Okay, no need to wait till product costing is completed. If you are good in the product costing, then you can say that you are FI CO consultant. Not only even to call as a CO consultant. You can say that I had good experience in both modules, FI and CO. But in the real time, it's not going to be like that. Okay, people are dedicated for finance, people are dedicated for controlling. But there are cases where people are representing as a FICO consultant, mean to say that you did have hands-on experience in both modules. What is the question people asked? Here we don't have T codes, sir. I'm not going to give you T codes. This is just overview of the syllabus, sir. Okay, I'm not getting to this system, right? T codes all we will get. Yeah, we have the T codes. Okay, entire SAP, not only in finance and controlling. Every module, every screen that you operate will have the T code. Lakhs of T codes are available in SAP. Okay, every screen where you will work having the T code. Okay, for your information, every screen that you will open in SAP will have the T code. But does it mean to remember all the T codes is required? No. Okay, there are certain T codes which we need to remember that I will highlight during the our training classes. Okay. Any questions? As this is the syllabus, so overview of the syllabus. The planning is 8 hours. That means per week 8 hours and 32 hours in a month. And effectively we run the class for 2.5 months. We can able to achieve this. Hope that we will be able to complete in the time frame of 80 hours. Any questions from anyone?
Hi, Mallikarjun. Hello?
Yes, guys, please speak loud.
Hello?
Yeah, I can hear you.
Okay. Difference between the ECS and S4 HANA, better to.
Now we are training in S4 HANA. So do not need to talk about ECC, what is there in the legacy. Okay. We will talk about at the end of the course, what was there in the ECC, what are the add-ons in S4. If I touch the changes now at this moment, then people will get confused. So that's the reason our training is completely in S4 HANA. Okay, people who are looking for job, you can also say that I didn't work in ACC. No problem. You can say that my entire experience is in S4 HANA because S4 HANA journey started in the year of 2015. Now you guys are going to keep the experience from 2020 or 2019, right? Mean to say that you can also say that I did not have experience in ACC. I've been working in S4 since 2020. Mean to say that whether you know the changes or not, you don't know the changes, also fine. But yes, to answer your question, at the end of the syllabus, okay, we'll give you glimpse on the what was there in ECC and S4. What all the changes that we have. If it is required, we'll also walk through it in the system. Okay, so what somebody asked, changes in S4 versus ECC. Now many of the people are here only for S4. They don't know what is ECC also. Okay, so changes.
Okay. Thank you.
Changes or S4 versus ECC. S4 versus ECC. Okay, now we are in the premier training. Okay, so basically people used to try in ECC, then they will say that what we have in S4. Now we are learning S4, we are trying to know what was there in the ECC. Okay, does it needed to know ECC, what are the things we have in ECC? No. Okay, that's what I'm saying. S4 was implemented, I mean S4, the journey of S4 started 2015 onwards. Now you are going to keep the experience from 2020. Right, you can straight forward, you got an opportunity to start work in S4 only.
Okay.
Okay, so yes, better, it is the added advantage. It's an added advantage if you know what was there in the ECC. That means history of the SAP.
Please give an overview at the end of the session
Yes.
to know the difference between ACC and S4 HANA.
That will cover, not end of the chapter, I would say that.
Yeah, if you give changes after broadcasting, after cost centering, we will also get confusion.
Exactly, that's what I'm saying, that and at the end of the training I would cover all the changes.
It's enough. Thank you.
Okay, it's a just add-ons, guys. There is no much difference ECC or S4 functionalities, whatever we discussed. Okay, the functionality wise there is no change. So just to give you at a high level what was there in ECC, add-ons. Okay, add-ons means new feature. If you buy the mobile, let's say I'll take the best example, Apple. Okay, 10 years back what was there, now what is there? Add-on features, the objective of the iPhone or Apple, whatever the phone that you are buying, so you could see additional features, right? The objective of the mobile is to talk, to see some new features, or you have the more controls in the upcoming versions. Here also in S4 versus ECC, at high level, if you talk about what was there and here, additional features. Okay, technically there was a database change that we don't need to understand much. Okay, functionality perspective, these are all the same scenarios, be it cost center accounting, be it product costing, be it profitability analysis. Functionality wise, there is no change at all. Okay, additional features we have in S4. Okay, that you need to remember. So people are afraid saying that I didn't work in S4, I didn't work in ECC. What was there? So SAP is completely inherited. I would say that adopted from your traditional accounting only. Okay, so that means this functionality is not going to change even irrespective of the versions that they are delivering. SAP, let's say every year they used to release the versions. Does it mean does it mean this functionality is going to change? No. The performance of the SAP will improve. Okay, especially for reporting perspective. Let's say to get the to download one report or to execute one report. Let's say the execution time it will take, let's assume that 5 minutes at the moment. Maybe that performance they will improve, or analytical reports they will add more. Okay, now in SAP we have to highly depend on other SAP analytical tools. Okay, SAP is the data lake. From here data will flow to the different external systems where the data would be visualized and analyzed. Okay, going forward that analytical tools also going to be implemented in S4. Okay, so just to answer your question, okay, so there are no much changes, especially in the controlling module. Okay, we have in ECC the first functionality change. I would say that let us cover just in theoretical perspective, cost element accounting. Just give me 1 minute, guys. I'm back.
Mallikarjun, there is no much changes by comparing FI coming to ECC to S4HANA, right?
No, we're not talking about finance model. Okay, do not mix over and here. Okay, we'll talk about finance model. So that is ongoing classes. Now we are talking about only controlling model. Okay, let's talk about some of the changes. So changes, I am talking about changes. Okay, there is no functionality change. Difference are changes in S4 versus changes in S4 versus ECC in controlling module. I do not want to make you to confuse because we are parallelly running FI and CO. When we are talking about controlling, do not bring the FI topics. Okay, other people will get confused. Those who already been trained, having some knowledge, you will understand easily. But others, they may confuse. Okay, so we discuss anyway every day. We have the FI classes. We talk about more with respect to content. Okay, now we are talking about S4 versus ECC. Even some of you who are attending now, they don't know what is ECC also. But just to give you, so since you guys are asking what what was there in ECC, what is there now in S4, that I want to give you some highlights. Okay, controlling. Now cost element accounting perspective. Cost element accounting. Okay, here in ECC, cost elements creation is part of controlling module. Okay, is a part of controlling module. Now in S4, all cost elements we can call it as a secondary GL accounts. Okay, so creation of cost elements in S4 is part of general ledger accounting. General ledger accounting. Okay, that means there is no cost element accounting. Functional device, there is no change again here. The creation of the cost elements in S4 is part of the general ledger accounting. Cost elements now can be called as a secondary GL accounts. Cost elements now it can be, sorry, all secondary cost elements. All secondary cost elements now it can be called as secondary GL accounts. Secondary GL accounts. Okay, that is what we could see. We will try to understand when you are going to talk about cost element accounting. So this is the change, I would say, that at cost element accounting. Cost center accounting, do we have any changes? Cost center accounting. Okay, just we have budget availability control. Budget availability control. Now we have in cost center accounting. So what is the budget availability control? That we will learn at the respective time. Okay, so no change for other functionalities. No changes for other functionalities. For other, okay, other scenarios or functionalities. No changes. Okay, we have universal allocations, but no change in terms of the functionality. Universal. This terminology we don't hear in ECC environment. Okay, universal allocations in S4. In S4. That means your distribution assessment cycle is a part of the universal allocations. Okay, whether you can use the universal allocations or you can use the same functionality that we have in ECC. Okay, so that is there is no change at all. Product costing, if you ask me what all the changes we have, for internal orders, no change. Before that, internal orders, no change. No change. Okay, so then product costing, there are some screens have been simplified. Okay, so that we will highlight. No change. Okay, profitability analysis. Product costing means all the scenarios, be it make to stock, make to order, any other scenario, there are no changes. Okay, as I said, there are some of the areas screens have been simplified. We will learn during the respective topic discussion. Okay, margin analysis. Yes, we have changes. Margin analysis. Here in ECC, it is called as a accounting based COPA. The terminology have been changed. Accounting based COPA. Okay, so there are limitations in ACC accounting based COPA. So all the limitations have been incorporated or addressed by the SAP. Okay, changes versus if you talk about a high level, Okay, production variance split. Production variance split. Okay, and COG split. Then what else we have? Statistical condition types. Condition types. Then incoming sales order functionality. Incoming sales order. Incoming sales order. Okay, if we talk about in S4, in ECC COPA and S4 in S4. Okay, here we do not have this functionality. No. Okay, all these functionalities we do not have in ECC. Here we have all the functionalities. Okay, so this is the change you could observe in S4. Okay, then material ledger actual costing. Sorry, material ledger, not actual costing, material ledger. Okay, so this in S4, in ECC, activation S4. Okay, material ledger activation. Okay, in ECC it was optional. It is mandatory. So why I'm giving these changes mean to say, if you able to explain theoretically also it is fine when the people are talking about ECC. Okay, that's what, since I haven't worked in ECC, you don't need to explain much. There is no, that's what I'm saying, functional device, there is no change. If I want to evaluate you, I can evaluate you what is the product costing, what is the budget availability control, what is the margin analysis. Okay, so only thing is people expect you when the people touch these kind of questions. Do you know or have you know that? Did you notice any changes that we have in ECC S4? So contra, you are working in S4. People don't ask you what was there in ECC. Let's say if you say that you are working in ECC, do you know what are the changes that we have in the latest version of S4? Okay, since you are already projecting your S4 consultant, they don't ask you. Even if they ask you also, you can say that I started my journey with S4, not with ECC. But having said that, if you know the changes, okay, it's always welcome to add your skill set to the ECC environment. Okay, so these are at a high level. All the changes I have covered here. Cost element accounting in ECC environment, we create cost elements in GL account as a cost element in the controlling module. But in S4, okay, we create all the cost elements as a part of the general ledger accounting. Your secondary cost element, now we can call it as a secondary GL accounts. Cost center accounting, no other changes except budget availability control. In ECC environment, this functionality we will use by using the statistical internal orders. But in S4, directly you can apply this availability control. That means at each and every transaction, okay, you can load the budget, and if the budget is exceeded, system it will throw the error saying that your budget is exceeded. So that controls we can apply by implementing the budget availability controls. Internal orders, no change. Product costing, no change. Okay, so there are certain changes. Yes, we will cover, especially if we talk about there is mandatory one thing. Okay, what is that mandatory? Maintenance of the production versions. Just 1 minute. I'll keep also that change. Maintenance of the production version maintenance. Production version maintenance. At all the cost objects. At all the cost objects. Is mandatory. Okay, that means be it production order. Example, production order. Earlier, this was mandatory option for the in ECC environment, the maintenance of the production. What is the production version? Again, you may ask the question that you will understand the respective time. Okay, production order or process order or CO orders. or I would say that product cost collector. So this was optional, some of the examples I given. Okay, so and also there is another T code like CK40N. So where then some features added, okay, that we will understand the respective time. Okay, so now these are the changes. So people who ask for the changes, this we are going to see in the system. Okay, so that you will be more comfortable to project yourself what was there in the legacy. Okay, so any questions, guys? These are the changes that we would cover at the end of the chapter, at the end of our training. Okay, we will focus on these above scenarios in S4 as a part of our training program. Okay, any questions, guys, from anyone? Overview of controlling, I will say that. Okay, so this is the entire syllabus of the controlling. So this is more than enough, as I said, to be called as a CO consultant. Okay, any other questions? Welcomes you from you.
So do we cover batch costing and all?
So that is a production order, sir. The batch-wise
That's
costing nothing
consulting.
but production order. So that
Yeah,
you will understand in the product costing. What is the batch-wise costing?
actually,
Yes, we cover
some
that.
of the SAP terminology is different from the usually we're using words.
That's correct. It should be. You are not going to be a what to say that cost accountant. You are going to be a CO consultant. So that means you should be close to SAP terminology. Of course, you should also understand what is the traditional accounting, but it is needed. We'll discuss. So batch-wise costing is nothing but production order, product costing, product cost by order.
And one more thing, this is regarding to material ledger. While applying the material ledger, we use like some balance sheet valuations like LIFO, FIFO, like
Yes.
that, right?
Here I have not mentioned that. Okay. So that is so in order to cover all those scenarios, this 808 hours is going to be, you know, I would say that more than 200 hours to cover all those topics. Okay. Before LIFO valuations, yes, we will understand, but not extensively. That is, in the real time, I would say that out of 100 clients, only 3 to 4 clients are using FIFO valuation, first in, first out, and last in, first out.
Last
That's a
in.
balance sheet valuations. Inventory valuations for balance sheets at the end of the month that we will use. So here I mentioned here, these are the inventory valuation methods: price control, standard price, and the moving average price. So this we will try to understand extensively.
And
Inventory, in addition to this, as you rightly mentioned, FIFO valuation. Okay, so time permits we will discuss, but I'm not going to promise you that I will cover that FIFO valuations. Time will not
uh,
permit us, sir.
do we really use in FIFO and LIFO in real-time analysis?
Yes, that's what I'm saying. Out of 100 clients, there are 3 to 4% people are using FIFO valuations. If you are using the material ledger actual costing, because I mentioned here only material ledger. Okay, I have not even mentioned the material ledger, just activation of the material ledger. Okay, so if you're in the material ledger, again, we have different scenarios. Okay, different functionalities, I will say that. So basically, material ledger, here we have 3 functionalities. Okay, I'll say that material ledger, inventory valuation in multiple currencies. Okay, inventory valuation. By implementing the material ledger, we will get 3 functionalities. Of course, we also have another functionality, but that we don't need to discuss. Okay, inventory valuation in multiple currencies. This is by default in S4. This is the basic functionality. Multiple currencies. In ECC, this is also, since activation is optional, this basic functionality also we don't get if you don't activate the material ledger. Now, ML with actual costing. Actual costing. Then multiple valuations. Multiple valuations. Here again in the multiple valuations, we have legal valuation, group valuation. This is extensive syllabus of the material ledger, not material ledger and controlling. Okay, legal valuation. So then group valuation, then profit center valuation. Profit center valuation. Okay, also called as a arm's length price, transfer pricing. Transfer pricing. Those who studied CA or CMA, arm's length price is called as a transfer pricing. When you are moving the stock from one plant to another plant, which belongs to different profit centers, how you are going to apply the markup. Okay, that is nothing but transfer pricing. Legal valuation, your inventory is valuated according to your local accounting principles. Okay, group valuation, eliminating the intercompany profits or elimination of the intercompany profits. Let's say you have transferred the stock from one plant to one company code to another company code. In the legal valuation, you would see, let's say I have two company codes. So to talk about more on this, again, it will take 2 more hours. Okay, I just give you here group valuation, nothing but eliminating the intercompany profits. Eliminating intercompany profits is nothing but, okay, group valuation. Here, cost plus markup. Cost plus markup. Yeah, this is nothing but transfer pricing. Okay, so this functionality, see, you asked the question, LIFO valuation or PIFO valuation. If you are implementing the material ledger actual costing, that PIFO valuation not required to implement. ML with actual costing, material ledger with actual costing, then certainly not required or not recommendable to use the PIFO valuation. Okay, it is a more or less material ledger actual. If you implement this functionality, this is the optional. Activation is the optional. Whether you use or not, optional. Okay, so multiple valuations also, it is the optional functionality. Optional. Okay, so whereas the inventory valuation in multiple currencies, the activation itself, it gives you basic functionality. So this we get as a basic functionality. Basic functionality as upon activation of ML, material ledger. Okay, so this is the basic functionality. That means when you are activating the material ledger, as I said in S4, activation of the material ledger is mandatory. So this functionality we get. So using the material ledger actual costing and multiple valuations optional until the client having the requirement. Okay, they have stock transfers between the plants, between the profit centers. They want to prepare their group reporting. In that group reporting, definitely as per the accounting standards, they have to eliminate intercompany profits. Then they have to implement a group valuation. And if the stock transfers takes place between the internal business units, so where they are applying some cost plus markup. Okay, so in that case, we need transfer pricing. So this is also optional. Purely it depends on the business requirement. We will implement material ledger with actual costing and multiple valuations. Whereas inventory valuation in multiple currencies, this is mandatory functionality. Okay, that means as a activation itself, we get this functionality. What is the multiple currencies? Your company code have now company code currency and group currency. So without activation of the material ledger, okay, in ECC environment, so your inventory valuation happens only in the legal currency. Okay, it's not possible to have in group currency. Now we get in both currencies. So that we will discuss more at the respective time. So to answer your question, Durga Rao, so PIFO valuation method is not recommendable if you are implementing the ML with actual costing. The same functional, the same result it would give you ML with actual costing. Okay, so system perspective, we will discuss how it works at the end of the chapter, but I'm not going to cover PIFO valuations. Okay, we will cover till here. Okay, so margin analysis. Right. So this is the entire syllabus of the controlling. Okay. When we move to the organizational structure, org structure in SQL. Okay. What is the organizational structure? So can we take little 10 minutes break and we will regroup again, guys. Okay. Just to take the 10 minutes break. We will meet again 8:45. Okay. Have a small break.
Yeah, sure.
I'm back, guys. Who is the name user of the person 001? Who is the admin here? Nagamani, you are the admin here. So may I know the person who joined with 001? Guys, can you hear me here?
Yes,
Yes,
Mohammed.
sir.
Yes.
Yes,
Yes.
Yeah, may I know the person who joined with name 001? Can you please speak?
I think Subir is there.
Who is this person 001? Can someone speak? Who joined with the name as a 001? Request to everyone, please join with your full name. Okay. All right. So still this person is joined but not speaking. What's the problem? 001 person.
Can we check the mobile number?
I don't see here anything here. Okay.
Okay, okay.
Right, guys. This is a professional training program. So please join with your full name. So we have to have tracking who is joining. Okay. I have not given any, I don't have any control so far. And if I see any people who is not part of our training program, so I will, even the person who allowed him to join also will remove from this group. Okay. All right. So far we discussed about complete overview of the controlling. Okay. So what are the topics that we are going to cover? Now org structure in CO. Okay. So what is org structure in CO? That already we discussed as a part of the FI syllabus also. Okay. So the FI key elements, FI CO or CO key elements. CO org structure. There is no FI CO org structure. Just a CO key elements controlling. CO organizational elements. Organizational elements. Okay, so here we have to understand operating concern, operating concern, controlling area, controlling area. So these are the key organizational elements. Then we have company codes. So then company codes are assigned profit center. Profit center are assigned to the company codes, profit centers. Then master data. This is nothing but cost centers. Okay. So even I'll remove only these three we can call it as a CO organizational elements. That means one operating concern may have a number of controlling areas. One controlling area will have a number of company codes. Okay, if you diagrammatically represents this org structure, I'll say that operating concern is the highest organizational node. Operating concern. Okay, so this is the highest node under which we have controlling area. One operating concern may have more than one controlling area also. Okay, but recommended to have only one operating concern. Then what we have? Controlling area. Controlling areas. Okay, here we may have 1:1 or 1:n. Okay, one operating concern, one operating concern can have multiple controlling areas. Okay. One controlling area will have one controlling area can have multiple company codes. Okay. So we discussed about during the controlling area definition. Here I'll say that I have 3 company codes. Let's assume that we'll take the 3 company codes. Okay. One is in India. We will set up the for controlling separate company codes and controlling area. Okay. We are not going to touch our regular company codes. Okay. We discuss this controlling from scratch. Okay. Again, we discuss configuration. I'm not going to explain much because all the things we already discussed. Okay. So we just to set up the things which is needed to run the controlling. Now let's assume that we will define like, what to say, Mahindra Group that we are already discussing, right? Now I'll take that Honda India Private Limited, or I'll take another what is that, Ashok Leyland. Okay, AS 10. Okay, Ashok Leyland. This is in India. Okay, so there is another company code AS 20. This is in US. Okay, Ashok Leyland. Then I'll say that AS 30. This is in Canada. CAD. Okay, Canada, nothing but these are the 3 company codes we have for Ashok Group, Ashok Leyland. Okay, Ashok Leyland Private Limited. So this company, okay, we have in 3 countries. One it is in India, another company code is in US, another company code is in Canada. Okay, these companies, these are the subsidiary. This is the parent company. India company code is the parent company. Okay, these are the subsidiary companies. Okay, so for management to see to have a single controlling area for multiple company codes, what we have to do? We need to have cross company code cost accounting that we see. So this is the structure. I would say that. Okay, this is the org structure of your controlling. Okay, what is the highest organization node? Highest concern controlling area, and underneath of the controlling area we have company codes. Again, these company codes may have n number of profit centers and plants. Okay, so this is the structure, key organizational CO organizational elements. When the people will ask you what is the structure of your CO module or controlling, this is the structure: operating concern, controlling area, and the company codes. Okay, operating concern, it is needed only when you are implementing the COPA. It is mandatory. It is required. Okay, for controlling and profitability analysis. Okay, if no COPA, operating concern is optional, but controlling area is mandatory. In the CO model, if you want to implement the CO model, controlling area is mandatory. It is a mandatory. It is highest. It is mandatory. I would say that. And the highest organizational node, highest org node in CO model. Whereas the operating concern, it is optional. It is required for controlling and profitability analysis. If no COPA, COPA means controlling and profitability analysis, not required to create, not required to have operating concern. OC nothing but operating concern. Okay, so this is the, in nutshell, I would say that this is the structure of the CO model. Operating concern at which all your market segment related information will be captured. I'll give you the node separately. Controlling area, it is the highest organizational node and it is mandatory in the controlling model. Okay, at which all your overhead related cost would be controlled. Okay, under one controlling area may have 1:1 possible. That means your controlling area same as a company code, or controlling area same as a, cross company code cost accounting. So what is the prerequisite to have a multiple company codes for one controlling area? So that we will discuss. So this setup we will do in the controlling. This is the org structure. Let's say, so this is you can also see, right? This is one of the client that we have implemented. So you can see, right? SAP client. Okay, that means this is the highest in SAP. Under this client, we are going to set up all the things. Now you can see here, operating concern, controlling area, company codes. Then you have the plans. Under the plans, you may have the company code. Further, you will have the profit centers. Okay, profit centers are defined at controlling area. By default, one profit center is assigned to all company codes. This is the org structure. Overall org structure, enterprise structure. So that means you can see here sales and distribution model. You can see here material management. Okay, you can see here the color it notes. Yellow represents finance, P2P, production and planning model, or deliver to schedule, P2P and OTC. These are the different models. This is the overall org structure, not only finance and controlling. It is a material management, it is a production planning model, it is a plant maintenance. Okay, it is a SD model. So this is the structure of what I would say that this is the structure of the organization structure. Let's say if you are going to implement SAP for Ashok Leyland, okay, then this is the structure you need to let the business to understand. You can see, right? Client will have the operating concern. Operating concern will have the controlling area. Controlling area is further assigned to the company code. Company code further it has the plants. Plant nothing but for material management. Under the plant again we have the storage locations. Plant further it is assigned to the sales organization or sales area. Okay, if you see right side, company code is assigned to the purchase organization. This is closely linked to all the models. So this is where we have established the link between other models. Okay, when I say SD model and MM model, SD model and MM model and production model is closely integrated, means this is a structure that you need to set up. Okay, if you want to utilize if you want to implement sales and distribution model, then who is the dependency? The company code we need to create. Okay, if you want to utilize the controlling functionality, then you need to implement the controlling model. Right, so this one should understand this is the enterprise structure at organization level, not specific to the finance. Okay, so this, if you are going to work in implementation projects, this kind of the diagram that you need to let the business to understand. This is the whole org structure that we are going to implement in your business. Okay, customer doesn't know what is operating concern. Customer doesn't know what is the controlling area. Even customer doesn't know what is the company code and company. Okay, we already discussed the company code is nothing but legal entity. Okay, so how do we finalize the company codes? How do we finalize the controlling areas and operating concerns? We need to let the business to understand. Okay, so functionality, if you want to use the controlling model, then controlling area, then whether they have one controlling area or multiple controlling areas, it depends size of their business. Okay, how many operating concerns? Certainly we would recommend to have, let's say they want to have more controls. I always take the example General Electronics. There are about 270 company codes they have. There are about more than 10 controlling areas they have. Each controlling area they defined as one operating concern. So there is no hardened code rule here to say that maybe people may ask the cross questions. How many operating concern is it possible to have? You can say always one, or doesn't mean that don't we have more than operating concern? Yes, it is possible. Okay, the management reporting business want to have, let's say General Electronic, there are more than 15 industries as far as I know that. Okay, they are there in every business. Every business they treated as one operating concern separately. The whole is GE Motors or GE General Electronics. Underneath they have a number of businesses. Okay, like that, here what I want to convey is how many operating concerns, how many controlling areas that you did define your experience means there is no straightforward answer. But say that always recommendable to have a one operating concern and one controlling area for multiple company codes. So what is your CO architecture here? CO key elements, operating concern and controlling area and company codes. Okay, so this is the structure of your overall organization structure. If you talk about only FI, okay, company code, and the operating concern, controlling area, and company codes. Further, you have the chart of accounts. Already we discussed about chart of accounts. One same chart of accounts can be assigned to your multiple company codes, subject to having the same operations. Okay, so if you look at this diagram, you will be able to understand your FICO module is integrated with all other modules. Okay, this is the structure that you need to let the business understand if you are going to conduct the workshops initially in implementation projects. Next is how the cost will flow. Okay, you can see here define financial enterprise structure. What is the objective of the implementing this all structure? Now we see, right? We record the transactions. Okay, then we prepare the books of accounts at every month. Then we prepare the consolidation. We disclose our statements to the respective regulators. Then the management reporting. Statutory is different and the management is different. Statutory is nothing but legal reporting. Okay, does it mean you have the same legal and management reporting is the same? No. Okay, so management reporting is nothing but completely your controlling module. Okay, in order to take the better decisions, in order to take the decision making. Okay, always by looking at to see what information that you get or what benefit to business they will get implementing the controlling model at the end margin analysis. Okay, they can able to know their profitability or profitability of the products, or if the product costing, if you talk about cost of the product that they will get. So having the cost of the production, they can able to determine the selling price of the product. All this information, this is the how the how we record the cost, how we prepare the books, how we submit the your financial statements to the legal, and how you will prepare the your management reporting. Okay, so then this is the KDD, key decision document. Okay, this is not needed for you. So this is just I want to show you overall org structure. Okay, any questions, guys?
Hello.
Yeah.
Yeah, if customer want to set up a plant, what is the role in CO?
1 minute, sir. Sorry, sir. Can you come again your question?
Customer want to set up a plant.
Customer
want to set up a new plant.
Okay.
What's the role of CO consultant?
So there is no role of the CO consultant. Okay, so it is consultant role. Plant is valuation area, nothing but. Okay, your all inventory will be evaluated at plant. You need to let the bigger, let's say, see, even they are setting up the plants also. Okay, so we may suppose to involve those discussions. Then what you need to, as a FICO consultant, here there is no CO consultant role, FICO consultant role or CO consultant. Okay, your all inventory valuation happens at plant level only. Okay, so further to answer your question, accounting determination. Okay, GL account determination in OBYC. Okay, there your discussions will trigger. But to set up the plan, there is, no, I would say that it is a consultant who has to take care plant definition and everything. Okay, no FI and CO role here. Yes, sir. Any other questions, sir? So looking at this diagram, so are you getting any questions or doubts? This is overall structure, not like FI and CO.
I have one
Yeah,
question.
for me, one doubt. I mean, if one company having controlling area, under that there may be more than one business units. I mean, like company codes. So if one company is in US, one company is in India, how I mean, if two companies are in under same controlling area, how it can be reporting purpose? I mean, a few reportings may be different from other countries, like legality requirement. How can we differentiate?
Right, sir. So that we did already discussed in the finance. Okay, so hope you have done the practice, the ledger concept, right?
Yeah,
So
yeah.
for management reporting purpose, we assign the same fiscal year variant, that is the V3, April to March, to address other accounting principles or other ledgers. Okay, so we adopt the non-leading ledgers. Non-leading ledger will have different financial year variant or
Fine.
financial year.
Okay.
Okay, and it can be assigned for their accounting principle, right? So we discussed already.
Same.
So the same concept
Same all.
applies.
Okay. Okay.
Okay, that's a good example now I have shown you here. Okay, if you see here in Excel, so these are the three company codes operating in different. So this India company code will follow the April to March. Okay, this April to March, since our parent company is in India, for controlling purpose, we assign the same variant for all company codes. This is V3. Okay, need to assign. So this is configuration. Will still we have not pitched in, but already we discussed. Need to assign to all the company codes. Okay, and also this is assigned to the 0L ledger, right? 0L ledger. Your leading ledger, 0L. Ledger, leading ledger. Okay, so then to address the US company code, what we do? We will adopt the non-leading ledger. Non-leading ledger. So what is the advantage having the non-leading ledgers? You can have Jan to December fiscal year variant. Okay, you have different posting period variant also. Then let's assume that this is a Jan to December. Okay, same ledger. Now Canada, this company code is following July to June. Okay, so US company code Jan to December. This company code is following the July to June. Okay, July to June. Here also we will adopt the non-leading ledger. Non-leading ledger. That means here for management reporting. Okay, for management reporting by default we will assign. That means especially to have a single controlling area. So we adopted cross company code cost accounting. So to have that, your fiscal year variant must be the same between the company codes and controlling area. Okay, this is purely for management reporting purpose. That means for your controlling. Okay, for controlling module. Okay, so then to address the legal requirements, we follow the non-leading ledger. We adopt that. Already we have been discussing every day, like ledger specific postings, right? Where if you don't specify the ledger, it will post to all the ledgers. But you could able to observe that the fiscal the period that as per the leading ledger, now we are in the third period. As per the non-leading, we are in sixth period. Like that, the data it will flow to the non-leading ledgers also. And also you can make the adjustments as per the legal requirement of the US company code or Canada company code. That adjustments you can post ledger specific postings. Right now, I think you guys have a fair idea why we are adopting the non-leading ledger. So to address the US legal requirements, we adopted non-leading ledger. Same data it will flow to the non-leading ledger, and in additional data as per the US legal requirement, we can post by using the ledger specific postings. Okay, this is nothing but ledger concept. I mean, we will adopt the parallel ledgers.
I mean, extension ledger.
Not extension ledger, non-leading ledger. Extension ledgers is just purely reporting purpose. Okay, extension ledger is not non-leading ledger. It is, I would say that additional ledgers. Okay, for tax reporting purpose, you can use the extension ledgers. This is for purely report legal requirement purpose. Your extension ledgers does not have or not possible to have different fiscal year variant than your leading ledgers, because your extension ledgers defined on top of the underlying ledger. What is underlying ledger for extension ledger? Either it can be leading ledger or non-leading ledger. That already we discussed. Whereas non-leading ledger can have different fiscal year variants, but extension ledgers not possible to have different fiscal year variants than the underlying ledgers. Okay, so that is about how we map the multiple company codes to one controlling area. Okay, this is the COR elements. Now,
Malkendra, I have one question here. So
yes.
I understand, one controlling area can have multiple company codes. Maybe it's easy to analyze or for reporting purpose, right? So in one particular area, right? There is an option like one controlling area equal to one company code, right? So in that scenario, I mean, I don't know how the companies will follow, maybe cross company code.
No, 99, I would say that 90% of the cases, okay? Because if you take any registered company who have the operations across the global, if you say that company controlling area same as a company code, but not possible to assign multiple company code, that is 1:1. Your controlling area equal to company code.
But
Okay, you
might
have
be
only one company code.
correct. So might be major differences for reporting purpose, right? So that's what I.
That's correct. Okay, so you have only one company code. Okay, only in India. Okay, that you have only one company. Even India also, we have multiple, let's say, Reliance Industries. How many legal entities that you have in India? Even though it is a one company, you have a number of company codes they have in India. In that case, if you want to prepare your group reporting or management reporting, if you define controlling area as the same company code, for every company code, you need to define one controlling area. Not advisable.
Correct, got it. And one more question, like
Yeah.
you just spoke about COPA, right? So
Go ahead, sir.
1 minute. So the COPA either COPA or property, I mean margin analysis is basically for all the companies, right? So
Exactly.
as we discussed, like it is the COPA or profitability analysis will be majorly maintain the product based or kind of customer wise or vendor wise data set.
Exactly.
So, but few companies where they don't have a production related business, where maybe service based companies also can
Yes,
have to maintain.
exactly. For margin analysis, yes. So rightly said, somebody has asked like how the CO model it is going to be used. The answer now, so they don't need to use the product costing, but they can use the margin analysis. Okay,
Oh,
all the service sales will flow to the your COPA. Okay, all the cost it will flow to the COPA.
Okay, okay. So
Okay, so
they
only
may
thing
not
is product costing you are not going to implement.
correct. They may not require product casting this since that is service based company, but margin
Exactly.
analysis will maintain.
Yeah,
Okay.
so that's correct. You rightly bring the topic. Thank you, Somsekhar. Somebody has asked like how controlling model it helps to service industry. So only thing is I would say that product costing is not going to be required. It is not required to be implemented, but cost center accounting, margin analysis, yes, because all your service sales is nothing but the revenue. Okay, whatever the OpEx expenditure that incurs to provide that service, it will also flow to your profitability analysis so that you are able to calculate your margin or profitability at the customer level or the service product level. Okay, I think Durga Rao you asked the question. Then how the CO model it helps to the service industry. So product costing not required to implement because they don't have the products. Right? That's a right way how we use the controlling model for service industries.
Okay, thank you.
Right.
One more question, sir. Where is the integration point FI and CO and other modules other than that cost element accounting?
That's only integration.
Only one area there.
Yes, you defined CO. If you define your GL accounts as a cost elements, it expects to specify the cost object. Right? Where do you define the cost objects? That cost object you define or create in the controlling module. The cost elements are bridge between controlling module and finance. It is the integration. Cost elements further, if you give the definition, cost elements are nothing but is the integration point or it is the bridge between the controlling module and FI. Data will flow from the FI to COPA, controlling module through the cost elements. That is the integration point. Okay, hope I answered your question.
In general, how many functional areas we can assign to cost
Depends on the
center?
business requirement. In OPEX, let's assume that in operational expenditure, you have sales and distribution expenditure, you have administrative expenditure, you have, at what level they want to define functional area. At expenditure level, you have a number of transport expenditure, traveling expenditure. So at each expenditure level that they can define the functional area. Okay, it's a purely depends on the business requirement at how many functional areas that needs to be defined. Okay. Right. Now we go for the, I think it is better to start the configurations from the next class onwards. That means from tomorrow onwards. Okay. So we'll list down all the configurations. Again, we will start, as I said, that there is no disturbance. I would say that FI classes and the CO classes. Here I'll define new company codes, new controlling area, new operating concern. Okay, so make sure that to start to do the practice, you also need to do the same configurations. Okay, this is for you, it is again opportunity to do configurations, and it's going to be revised. Maybe for me it will take one class to set up all the things, and for you also it is an opportunity to understand again all the sequence of the configurations we discussed, right? All the sequence of the configurations again we have to do here, and we'll restrict the discussion. I'm not going to explain much, but we'll do the configuration in front of you in the class itself. Okay, the new company code I'll create, new operating concern I'll create, like yes. So our structure it is going to be, I'll say that operating concern we will implement later. Okay, so company codes, there are 3 company codes we'll define. Okay, one is AS10. I hope that this name convention nobody is created. AS20, then AS30. Okay, this is for India. This is US. This is from Canada. What is the company code currency?
INR.
INR.
For US?
INR, USD, and
IN USD.
CAD.
Exactly.
CAD.
Right. Ashok Leyland. Maybe I'm spelling, I'm wrongly typing. Help me out. Leyland.
LEY.
LE?
LEY.
LAND.
LEND. Okay, thank you. Ashok
LEY.
Leyland. Okay, let's correct later. Okay, private
Okay.
limited. Okay, this is the group company. This is our parent company. Okay, so we have this company, we have the operations in India, US, and Canada. Company code currency. What is the currency type? 10, right?
Yeah.
Currency type 10. Type 10. Takes time, but okay, no worries. Okay, so you will understand in better way. Now, our group currency, this is INR, this is USD,
Canadian
this is
dollar.
CAD.
CAD.
Okay, this is the company code currency. What is the group currency? Group currency is the same for all company codes.
30.
Yeah, exactly. Okay, group currency, we do have USD. Currency type 30. USD. Okay. So we follow only 2 currencies. Okay. One is group currency, another one is company code currency. This is the group currency type 30. And you are controlling area currency also. Okay. Currency type 30. Okay. So chart of accounts we define COA.
Fiscal year.
Yeah, fiscal year. That's good. Fiscal year variant. Okay. We follow for management reporting purpose April to March. April to March. That is the parent company fiscal year, right?
V3.
So all these company codes will assign. Okay, V3. We'll use the standard SAP only. Not going to define any G variant. V3. Okay, so this is chart of accounts. Sorry, fiscal year variant. Then chart of account. We'll define one chart of accounts. Okay, let me define operational. A codification I'm just proposing. Operational chart of accounts, right? Ashok Leyland. ASOP. Okay, Ashok Leyland. First 2 digit represents, or AL. I'll say that. Okay, just name convention. Ashok Leyland operational chart of accounts, or primary chart of Ashok Leyland primary chart of accounts, PC. Okay, we will follow only one chart of accounts. As I said that primary chart of accounts is mandatory, country and group chart of accounts is optional. Okay, so this is a chart of accounts. Then the ledger. Okay, we have here ledger is 0L. By default, it is assigned to all company codes, right? 0L, leading ledger. 0L, nothing but leading ledger. Okay. Okay, leading ledger. So this is what we define. Okay, so one controlling area. Before that, one controlling area we define. What is the controlling area? AS00 or something else, or controlling area. Okay, this is the setup that we are going to do. Non-leading ledgers, yes, we follow for other company codes, AS20, AS30. Okay, so this is the setup that we are going to do. Any other thing? Posting period variant, you can have different posting period variant, field status variant, you can have. By now, you guys comfortable, especially about the global configurations, FI global settings, be it field status variant. Now, is it can we apply the same fiscal year variant? Is it mandatory field status variant to all the company codes? Not required to have a same field status variant. Yes, if you are applying the same controls, it is yes. Else you can define field status variant, you can assign to company code. Similarly, posting period variant, is it required to have a same posting period variant? Yes, if you want to apply the same controls, but recommended to have a separate posting period variant for each company code, right? So that means now that you guys are comfortable, especially about all these variants. Okay, for you guys again, those who are not attended few classes, this is again for you guys, it is an opportunity. But I'm not going to stress more discussion on the configurations. Okay, so we'll just complete the configurations and we will move on to the controlling. Our focus is on Saturday, Sunday on controlling part. Okay, so this is the configuration that we have to do. First, what we have to do, I'll bring the settings. The same settings we were here also will apply. So these configurations will follow. Okay. But I'll remove the country specific group chart of accounts, not needed. We are just trying to understand the controlling model. Till here it is the same, even in the postings also. Okay. Where is my Excel?
I think you have closed that Excel.
Did I? I have not saved, man. Explain
Yes,
lot
I
of
have
information.
seen.
Problem is here, since I am in the, here. Here I am here. Okay, I have not closed. So these are the sequence of the configurations. We continue tomorrow. So on this all the configurations, just observe in the class. Okay, so still if you are getting any doubt which you want to understand, okay, so we can discuss and we can further progress on these configurations. So what I want to convey here, we will set up the separate company codes. These are the company codes that we are going to define for our controlling purpose. Okay, we will just, our concentration is in the general ledger accounting, where you will have to understand GL account type, especially cost element categories. Let me open SAP. Let me save first it. Okay. So now, so this we will continue configurations perspective. Tomorrow we'll start for this company codes. Okay. So what is the first concentration as a part of this CO where we have to do is cost element accounting. Nothing but where do you see the cost element accounting? In the FS00, if you can understand the GL account type like primary cost and the secondary GL accounts, then you are good to understand the cost element accounting. So we concentrate here. Okay, GL account type, primary cost and revenues, and secondary cost. These are the P, nothing but primary and secondary. We extensively discuss on these two parts. Okay, now by now already you are comfortable what is the balance sheet account, what is the non-operational cash account we haven't discussed, but we will discuss at the respective time. So this is these two indicators in the GL account type P and S, it is relevant for cost element accounting. We will discuss. Okay, in the next class. Any questions, guys? That's it for today. Just to give you overview what we are going to cover as a part of the controlling. Any questions from your end?
Can you go once for org structure?
Okay. So this is the org structure that I have presented you, right?
Oh, it's an Excel. You have
Okay.
mentioned for operating concern, right? There I was
Yeah.
a little bit confusion with it. In the second time.
Okay.
You have mentioned it is required for controlling and profitability analysis if no scope.
It is required. So no, actually the terminology is this is the continuation part. COPA, nothing but the terminology in bracket. You can say that COPA. What is the COPA?
Controlling profitability analysis.
Analysis. Exactly.
Mm-hmm.
Okay. It is not like don't treat as a controlling is separate and profitability. COPA is nothing but controlling and profitability analysis.
That means if we apply the controlling and profitability analysis, we do not require any operating concern, not required to maintain
No,
operating concern.
that means if you want to, if you do not have COPA module, that is the margin analysis, then not required to define operating concern.
Okay.
So you are treating here, controlling is a separate, profitability is a separate. No, COPA is nothing but margin analysis. What is the COPA? Controlling and profit. This is the one sentence only. You are reading in a different way. That is the reason you are getting the doubt.
If no
it is required,
COPA,
I'll remove this. Okay, I'll remove this. Now you don't get confused. It is required for COPA. COPA analysis. If no COPA, not required to have operating concern. Right? There is no ambiguity now in the
Comprehensive
statement.
functionality, like.
so COPA means margin analysis only.
Exactly. What is the definition of COPA here? What is the COPA transfer stands for?
Controlling and profitability.
Exactly. That is the full sentence I given. You got some confusion.
Okay.
COPA is
It's like
nothing but
comprehensive
margin
functionality.
analysis. Yeah, correct, sir.
But in margin analysis also, I mean, I'm like using the costing technologies which is used in regular manner. In margin analysis, so we have different approaches, right? Somebody will go with cost and
Exactly. So now since we are in the S4 journey, I haven't talked about what is the costing based COPA. I'll cover the costing based COPA. The structure is completely different. Costing based as well, accounting based. Costing based, the structure it represents. Yeah. So I am because I do not want to talk about ECC environment. Now we are in S4 training. I am always highlighting the S4. Let's say you are talking about there are two types of the profitability analysis. Okay. One is costing based COPA. Another one is accounting based COPA. Now we call it as a margin analysis. Costing based COPA. Okay. The second one is account based COPA. Now in S4, the name convention has been changed to margin analysis. Account based COPA. Okay. So in S4, what we are calling it as margin analysis. In ECC, the terminology is accounting based COPA. Now in S4, you guys need to remember, in S4 we call it as margin analysis. Okay, there is no change in terms of the functionality. In ECC, that is in the legacy, we used to call it as a accounting based COPA. Even in S4 also, accounting based COPA is nothing but margin analysis. The name convention has been changed to from accounting based COPA to margin analysis. The structure, if you talk about costing based COPA, the structure it represents, how the structure it represents. Okay, value fields. Again, we may have to discuss again what is the value fields. Okay, and characteristics. Reporting dimensions or characteristics. Characteristics. Okay, this is nothing but the structure of the costing based COPA. The structure of COPA. Okay, costing based structure of the COPA is, what is that? This is the one. Okay, value fields and characteristics. That means revenues and cost will be captured by using value fields. So whereas the structure of the accounting based COPA is in ECC or in S4. Okay, what is the structure? I would say that GL accounts versus characteristics. Characteristics is the same and GL accounts. GL accounts. That means revenues and cost will be captured or represented by using value fields, whereas here the GL accounts, not value fields. Cost elements or GL accounts. Okay, this is the change. Let's say people will ask you the question, so what is the difference between costing based COPA, accounting based COPA? The structure of the costing based COPA, it represents, that means you need to maintain the value fields. Okay, for each GL account you need to assign the value field. That means whenever the data it will flow to the profitability analysis, it would be captured, it would be stored in the value fields. Characteristics here, what is the characteristics? Reporting dimensions. Reporting dimensions. Okay, this is also same. Like plant, profit center, okay, and company code, controlling area, customer, employee, product group. All these are nothing but examples. I would say that what is the reporting dimensions? Product, customer, okay, profit center, okay, product hierarchy. So like this, product group. These are the reporting dimensions. Plant, we can also say that. Okay, so company code. These are all the reporting dimensions. One controlling area, you may have a number of company codes, right? Then I want to see my profitability analysis company code. Further, I want to see at plant level. Further, I want to see the customer level. Further, I want to see the product group level. That means a reporting drill down option. You can able to get your profitability reports, different reporting dimensions. Further, you can able to drill down the reports. Those can be called as a reporting dimensions. Further, we call it as a characteristics. The structure is the same, but value that revenues and cost in costing based COPA represents through the value fields, whereas in accounting based COPA it represents through the GL account.
General ledger.
Okay. So that is the difference between costing based and accounting based COPA. Okay, because if I would have started classes in ACC, I could have given this all the analysis and explanation. Now we are in S4 journey. Okay, so yes, it is important to understand the different types of the profitability analysis. So that's the reason I said we'll cover all the legacy functionalities at the end of the training. So at the moment, this is more than enough. Okay, types of the profitability analysis. Good question now, Durgarav.
So the cost and the account based stuff in both the systems like ECC and S4 HANA, right?
Yes, GL accounts here. We have two types of the profitability analysis in both S4 and ECC, but in S4 we are recommending to implement margin analysis, not costing based COPA, because it is a part of the AC DOCA structure. Okay, so we understand at all the things at the end of the session. Okay, end of the training.
Right.
What is the recommendable as a part of the project classes? I'll cover all those things. Okay, at the moment, these are the two types of the profitability analysis: costing based and accounting based. All right. Any other questions, guys?
No, Malikan, just a extension of Machendra question previous. If one new plant established in CO, there is no consultant role, right?
Yeah, so indeed, at the discussions perspective, as I said, accounting determination you must have to discuss, and there is one activity that means material ledger. Okay, perspective you need to perform some cutover activities. That is the depends on the projects. Okay, some of the projects I have seen that the consultant will take care to perform that activity. But honestly, to say that if you do not have material ledger actual costing for that plant, then nothing, no action is from your end. That is from FICO consultant perspective. Let's say I have three plants today, and business is creating another plant. What are the actions that you need to take care? Okay, configurations perspective, nothing. But if they are doing any production process, or
Like
if they want to do any costing, so then you have n number of things to take care.
If you want to transport the goods from one plant to another plant, the effective cost will be occurred in this, no?
That's what I'm saying, sir. So special procurement key that you need to define, that you are not going to define, right?
Got it. In the
So configurations, no, I was highlighting here. I was trying to say that configurations perspective, your all configurations in the controlling, either it is defined at controlling area or at company code level, not at plant level, except material ledger.
Okay, got it.
So try to understand the global configurations and the company code configurations and plant level configurations. Let's say if you are doing any configuration at plant level from controlling or F5, then the same action you need to take care when new plant is created. If you are doing the configurations at company code or controlling area level, then introducing the new plant, it won't touch because you already, the configuration is at global level, not at plant level, right?
Yes.
Let's again the same question. If the plant is production plants, manufacturing plant, okay, then you will have to, your role is end-to-end testing from the costing perspective.
Yes. Okay. Understood.
Okay. Yeah. All right.
Thank you.
All right, sir. So any questions? That's it for today. So before we wrap up this session for today, any questions? Tomorrow we'll continue same from 7 to 10. So we start the configurations tomorrow. And I request you all, so who are not clear the fees and who are joined in this batch, please make sure that to clear the fees. Okay. We are not going to you keep on calling and requesting you, please make the payment. Okay. It's your responsibility to make the payment as agreed. Okay, please note that, please clear the course fees because we are in the second month and also started CO classes. Who joined only for CO classes? Please contact me if you have any, fees related discussions. Otherwise, please pay the fees and cooperate in this regard. Okay. Please note that, sir, this is a professional training program. We are not going to call you and asking and again and again. Please cooperate to clear your fees respectively. What you paid, to be paid. Please clear the course fees. Okay. So thank you everyone. We'll meet tomorrow as usual timing 7 to 10. Okay. Have a good day to all of you.
Thank you.
Thank you.
Thank you, Mallikarjun. Thank you all.
Yeah, thanks everyone.